I never imagined a world where I would see an ETF or a fund pays twice a week distributions, but this is happening, guys. We have always had dividends and distributions, but usually it used to be annual payment and then it changed to quarterly payment and then it came monthly payments. Just recently, we have seen ETF issuers like Yieldmax, Round Hills, Defiance come up with ETFs that pay weekly distributions, and this was a game changer. But what's going to happen now is going to be even crazier because you're going to receive a distribution twice in 1 week. So in today's video, I'm going to show you what fund this is and how much you can expect to make investing only $10,000. But first, let me show you this. Defiance NASDAQ 100 Lining Spread Income ETF QL price of today is 50.56. After hours on Friday, it climbed to 1.24%, and that will bring the price to 21.20. This ETF is brand new. It just came out not that long ago, and we can see here since it came out, it has ranged between 49.92 cents to 51.44. Volume is not that big. On average, is only about 21,000, and of course, because this ETF is brand new and many people don't even know about this ETF existence. So down here, there's more information. If you're interested to invest in QLDY and you want to diversify your portfolio, there are other ETFs that you can look at. For example, we have We Pay. This is an ETF that pay weekly distribution from Round Hill. And we have QLDY. This is Granite Shares, Yale Boost. And we have TSYY. This is a Tesla. We have XBTY. This also is from Granite Shares, Yale Boost. And we have yieldmax Ultra Short Income ETF from yieldmax. So these are the ETFs that you can look at. Now let's go deeper on QLDY and see what this ETF has to offer. And this is from official Defiance ETFs website. And after this, I'm going to show you a spreadsheet that I made to show you how you can invest only $10,000 and turn that into $1 million portfolio by reinvesting all your distributions. QLDY NASDAQ 100 distribution rate, we don't have any, but I have calculated and I'm going to show you how much distribution that is going to be. Distribution frequency, here it says monthly, of course it's weekly, but I'm going to show you the distribution calendar that shows or indicates their twice per week payment schedule. QLDY is an actively managed ETF that seeks a frequent income while maintaining the opportunity for indirect exposure to the performance of the NASDAQ 100 index, subject to a limit on potential investment gains. QLDY is the first ETF designed to make distributions twice weekly. Let me repeat this. QLDY is the first ETF designed to make distributions twice weekly, aiming to deliver more frequent income than traditional income-focused funds. The fund uses its proprietary line spread strategy, which combines two approaches. The first, they're going to use synthetic equity exposure through deep in the money call options on the NASDAQ 100, providing participation in equity market performance. And the second strategy that they're going to use is daily option premium generation through the systematic sell of 0-day to expiry put spread, seeking to capture rapid time decay from short-dated options. By blending these exposures, QLDY seeks to provide investors with consistent income opportunities along with the measured equity participation. The strategy is designed to balance potential growth and premium income while recognizing the risks of options trading and market volatility. Primary investment objective is to seek current income. The fund's secondary investment objective is to capital appreciation. As any of these funds, of course, their main goal is to make sure you're getting those distributions using premium call options. And also the second objective is to have exposure to the NASDAQ 100 so you can have the little bit of capital appreciation with your distributions reinvested as well. But you have to pay attention to this statement here. There's no guarantee that the fund's investment strategy will be properly implemented, and an investor may lose some or all of its investments. While the ETF seeks to provide twice weekly income, there's no assurance a distribution will be made. If distributions are made, it's likely such distributions will vary significantly from one distributions to the next. So this is very common for people who have been investing in these type of income ETFs. You know, the distribution always vary. This week they might pay, let's say, 20 cents. Next week they might pay 30 cents. They might pay 40 cents. They might pay 16 cents. So it's just normal. And of course, they have to make sure they put this statement that Distributions are not guaranteed, but so far I haven't seen any of these income ETFs cutting their distributions since they come out about 3 years ago. Distributions, which include return of capital, decreases the fund's NAV and trading price, which over time can result in losses on an investment. So this is their disclosure. You have to read this. And if you want to know more, you can go to defianceetf.com and you can read their prospectus for any of the ETFs that you're interested to invest your money in. And here's the more fund details. Net asset as of now is 3.79 million. Fund was incepted, or it came out to the market on September 17th, 2025. So it has been out for less than 10 days. Ticker symbol is QLDY. It trades on the NASDAQ. NAV is a 5056, as I've shown you earlier on Yahoo Finance. Fund holding has 7 holdings. Share outstanding is 75,000 shares. Expense ratio is 1.04%. So it's pretty much similar to most of these income ETFs. And here you can see these are all the holdings that they have. Top holdings, as I've shown you on their fund strategy, going to have synthetically call options, and also they're going to have some exposure to like a 0 day to expiry cover call options. So they have here the NASDAQ, they have First American, this is the bonds, and they have United States Treasury bills. This is their 0 day to expiry call option on the NASDAQ itself, and this is the bond they hold for collateral to write that synthetic call options. Distribution schedules, as I've mentioned, they're going to pay distributions twice per week. They're going to pay on Monday and Thursday, as we see here. So the first distribution they're going to pay will be October 2nd, which is on Thursday, and the second one will be October 6th, and then October 9th, and then October 13th, then October 16th, then October 20th, then October 23, October 27, October 30th. The declaration date is just 2 days from now, September 30th. X date and record date for the October 2nd distribution will be on October 1st. So this is pretty cool that you're going to receive distribution every Monday and every Thursday. Now, if you have other ETFs from, let's say, Round Hill and Yieldmax, you can combine. Pretty much you can get distributions every single day of the week. That's pretty cool. So we're going to have more information and more numbers here when they announce and pay their first distribution on October 2nd. Now we have seen what QLDY has to offer and its strategy. Now let's look at income projection. So the price of today, 58. Average distribution is about 10 cents. But you might ask, how did I get this number while they haven't even paid their first distribution? Well, what I did math and calculations based on other ETF that has the same type of strategy from their funds, which uses 0 day to expiry cover ETF, and I averaged the distributions and I came up with this number. Again, this number here is just an estimate, and all these numbers in the projection is not guaranteed that this is how much you're going to get. All these numbers can change, and there's no guarantee that you're going to make this income projection I projected here. Now, annual distribution, I came up with about 20%. Asset under management right now is 3.79, so closer to 4 million. So this is a weekly compounded growth with twice weekly payouts. So we have week 1, I did about 52 weeks because we have 52 weeks in a year. So we are starting with $10,000 invested. We are assuming that there's no more money will be invested apart from your distributions that you're going to add, and distribution yield per week will be 0.38 if you divide 21% per year, and you're getting about 38 twice a week. This yield, we are assuming it will never change, and we are assuming that the distribution they're going to pay about 10 cents or 0.96 will never change, but we know that's not reality because these yields also change. They can pay higher, they can pay lower. Now, the first week you invested, you're going to get $38, and that's after collecting twice per week, and you're reinvesting all your distributions, and this is a progression of your capital. $10,000 within 20 weeks, you're going to have $10,000 783. I can skip by week, and within 30 weeks you're going to have $11,000. Within 52 weeks, so after a year, your portfolio will be 12,181, reinvesting all your distributions. All distribution cumulative, you have accumulated 2,181. The yield stay the same, and of course your share keeps going up. You started with only 198 shares. Now, closing of 52nd week, you have 241 shares. So after 1 year, now I wanted to expand this spreadsheet to annual compounded growth with a twice weekly payout. So it's the same math. The first year we started with $12,000, 181. You invested and distribution earned is 2,181 as I've shown you here. Now you reinvested bi-weekly. You keep buying your shares. Second year, you have 293 shares, and distribution you have accumulated altogether is 4,837. Now, fifth year, your portfolio is $26,000. 10th year, your portfolio is $71,000. And after 10 years, your portfolio is only 71,909. So you're not even a millionaire. You don't even have 100,000. It's going to take you quite a bit to be a millionaire. But remember, as the number gets bigger, the compounding effect accelerates. Now your compounding effect is going to work as magic. See that? After 20 years, your portfolio is going to be $500,000. Now, just invest for 4 more years, your portfolio will turn into 1,138,000. Again, guys, this is just an estimate and projection based on the numbers that we have right now. There's no guarantee that you're going to turn your $10,000 portfolio into $1 million portfolio within 24 years. But now, if you want to shorten this time, because 24 years, this is a long time. If you want to shorten the time, you just have to add your capital. Instead of $10,000, you go to like a $20,000, or you go to $50,000, or you go to $100,000. Then your time of investing to get to $1 million portfolio will be even way shorter. The more you add, the shorter it becomes. So guys, I just made this video to give you income guidance for QLDY. This is a brand new ETF from Defiance that's going to pay twice per week distributions. Very interesting. So if you're interested in this ETF, let me know in a comment below. Will QLDY have a best performance than other ETFs that pay weekly distributions? That's to be seen. I'll catch you next video. Thank you for watching. Bye bye.